Let's take a look at those East African cable results just out. Profit there surging 946%. That's a sharp contrast to what we saw at the end of last year, where pre-tax profit dropped by 50%. Turnovers also up for the company. Why has this company managed to turn itself around?
So first of all, I think the current results are being flattered by a very poor previous first half when they had some troubles with their Tanzanian subsidiary. I think they threw everything in the kitchen sink into those results last year, and therefore the comparison is signaling a strong turnaround, but is being a little bit flattered by that comparison with the previous year. These are strong results. This is a good business, and I think we'll continue to see traction on the results front. The share price looks deeply oversold, as does the market, and I would expect some kind of trend higher now because they've clearly crossed an inflection point in their earnings.
Where's growth coming through for the company?
Well, I think it's coming through because they've got a good franchise in this region. There is tremendous demand for electricity. We're net short electricity all over East Africa, and they're essentially doing the plumbing for the electricity rollout, and I think that's a sweet spot for them. They've got a good lock on that market. They've got good presence across the region, and that's where I think the growth is coming from.
And the company looking to compete with dominant players in the power distribution sector in South Africa and Egypt, saying that it's looking to manufacture cables for the medium power distribution market. Is it able to compete with this with big players in South Africa like Telkom?
Well, I think they've got a niche. I think they're lean and mean, and I think they're able to pick their spots. And in that context, I would say yes. I would have thought there is room for them to compete. A lot of these big players have not faced much competition, and I think cables can snap at their heels.
Let's look at the overall market because the bourse hit a fresh 2011 low yesterday. It's a fresh 2011 low and an 18-month closing low. Mumia's Sugar taking a battering. Access Kenya Safaricom also down more than 5% on the day. How are you trading this bearish trend?
Well, you can't trade short in the Nairobi Stock Exchange, so it's a very tricky landscape right now. It's all momentum driven. We've had a brutal 2 days yesterday and the previous session. As you correctly noted, we've got a bunch of stocks hitting 52-week lows, admittedly on extremely low volumes. Safaricom came down yesterday on less than 1 million shares, which is probably about 1 or 2% of its moving average. EABL was marked down a great deal before ticking up yesterday as well. So it's become very thin, it's become very scrappy, bid-offer spreads are very wide, and if you need to sell any shares, it's becoming very tricky to do the same at a reasonable price. It's a little bit of a fat tail here. On momentum alone, I think we're going to head lower. On a PE basis, on a valuation basis, the market looks really cheap, but it's a little bit like catching a falling knife at the moment.
Let's look at some of the outliers in market performance. Kenyan Market, one of those, for the month, up 9% to 11.45 shillings. Its results are out on the 26th of July. The company seems quite well positioned for growth. It's just had that acquisition of the modern oil terminal in Dar es Salaam. Back home in Kenya, it looks to be clawing market share away from the likes of Total. Are you adding this stock to your portfolio?
Yes, I was a buyer around just below 10. We got this big run up. I'm looking at it. I'm looking at it on any pullbacks. We got one yesterday. They've got a lot of street smarts in this management. Their intellectual capital is significantly higher than other corporates I could mention. And I think on that alone, I'm very bullish. I like what they're doing. They faced a very difficult situation here domestically. They expanded their footprint across the region. And they gave earnings guidance about 4 to 6 weeks ago where they said the first half would see a 50% increase in profits before tax. I got no reason to doubt their word.
Mumia's Sugar is taking a battering, it seems. It's had a rough month, down 12% in the month, 60 shillings. The president declared that drought at the end of May. Are investors pricing in low production? Is this why the stock has taken quite a battering?
The stock has taken a battering because their first half results were minus 22% compared to the previous first half at a time when the sugar price hit a 31-year high and was at record highs. And really that divergence was frankly inexplicable. And I think a lot of investors lost faith with that performance at that time. The question is now, have they turned it around? In the medium term, this is an interesting share. You've got ethanol, you've got a whole bunch of new business lines. But in that first half result, the organization lost an enormous amount of credibility in the financial markets, and they have to recover from that point. So I think it's really very key what they produce at the full year mark. But essentially that divergence has rung alarm bells in my head and in every single investor's head I speak to.
And it's facing headwinds in the face of increased competition in the country as the country opens up its borders to regional producers. So your thoughts on the stock not getting involved in it at this stage?
I'm on the sidelines because those results were just not believable, and when I see that, I just can't get involved. Having said that, it's a very cheap share right now. The PE is extremely low. I like the sugar price. I think sugar is in a very, very sweet spot going forward over the next 1 to 2 years. I think they have interesting business lines coming on stream, but until I see some results which meet my expectations, I shall wait.
Aly-Khan, we have to take a look at what that shilling is doing after the central bank placing restrictions on borrowing and also now reducing the overnight lending rate after increasing it to affect liquidity. What are your thoughts on the CBK's movements at this stage?
Well, what it is, it's probably not about the actual interest rate. That's the relevant point. The relevant point is the amount of liquidity that's being made available at the window. The historical moving average of the liquidity that was available was about 8 billion shillings. It climbed as high as 157 billion. And essentially that was a golden flood of liquidity that people were using to short the shilling. And I think the central bank has now cottoned on to that. And essentially why we're seeing this strengthening is because they're basically throttling back on the liquidity available at the window, and they're exercising a great deal more scrutiny. The banks don't want to be seen at the window, they want to avoid it. And therefore I think they have done enough for now to keep the shilling, I think, in this range. We won't revisit that blow-off bottom we had at 91.95. I can't see that happening again. But I think for now we're in an 88, 91 range with a bias for strengthening, especially if we continue to see Bernanke talk about a QE3 and put the risk back on the global markets, which would help the shilling as well.
You see that dollar falling this morning, as you say, which has helped the shilling yesterday as well, and the naira for that sake.
Yes, I think it was helpful. I don't necessarily see this euro rally lasting. I think it's going to fade because the problems are pretty serious. But for now, we've got risk back on, and everyone's running for risk.